Hi Geeta, welcome on Investment Tales with MA.
Hi Nandini, thank you so much for inviting me.
To start out, just wanted to understand, how long have you been investing in startups? How many portfolio companies do you have? How many exits have you seen? Just an overview of your journey.
Okay, great. So I actually have been investing in various asset classes for the last 30 years or so. And in that journey, almost 25 years ago, I invested in a couple of fairly early stage companies in the tech space. And that was just a couple, but they were very successful. So after about 15 years or so, they actually went to IPO.
Wow.
And one saw the 100x return, etc. And after that, I didn't really do too much angel investing, but it was more other asset classes. However, when I came back from London 7 years ago, that's when I thought that the angel space really has developed and there's a lot of opportunity in India, and how should I go about doing it? And that's when I thought joining an angel network would be probably the right thing. So for the last 6-7 years, I've done it on a more formal basis as part of Mumbai Angels. I've done about maybe 8-10 companies in total. Of those, the ones that I've more recently done, I had one exit in about 2 years, which was at 2.5x, which is quite unusual. Another, I've got a couple which are on up rounds and are looking like they do quite well with a 30x, and there are one or two which are looking like they can crash. I hope not, but they could get there as well.
Super. So, let's move into, the merits and, you've done investing on your own versus you've done investing through a network. What do you see are the merits of investing through a network versus doing this on your own?
So I think there are a lot of merits of investing through a network. So in the first place, I would say that one gets sifted deals, which are, self-selected, and they're selected to a certain standard. Because if one is doing something on one's own, one has to spend time meeting a number of founders, and a lot of the deals are really not realistic. They're half-baked, and they're just ideas, or they're not viable. So there's a fairly detailed level of quality of deal which we see through a network. One may not invest in them, but they certainly all merit a discussion in terms of at the level that they are. So I think that's the first thing that one gets to see through a network. And I think even more important than that is the fact that one learns and invests with a bunch of very knowledgeable peers. And each of us has a distinct skill set that we bring to the table. So for instance, my background is finance, but someone else has a background in technology, which I don't know very well at all in terms of, understanding that space, or even HR, or, just as an entrepreneur in the chemical space or healthcare or any space. And when you get the collective pool of people together, the input and the knowledge that one gets in terms of assessing a deal is invaluable. I looked at a couple of deals with people who, in fact, even then as, maybe 4 or 5 financial services, my ex-colleagues, etc. But we all tend to then think in a certain way.
Absolutely.
And have a certain degree of, we understand the financials, but not the technology, or not, the end consumer, which is an input that one can get. So that's why I think that is a very valuable aspect of having a network, working with the network as well. And if one is starting off in the journey, what I found was very valuable was that one learns from other investors. They've been through the journey, the kind of questions they ask, what are they focusing on. So moving up that curve is fairly quick. And one's also looking at a number of deals. So you're looking at maybe in the year 40 or 50 deals, and when you're looking at those 40 or 50 deals, you get to see fairly quickly, what's important, what worked, what didn't work. The angel network will come up with which of their deals were a success, which failed, and that's valuable input, I think, as well.
How about the post-investment benefits that one sees in the network? Because why I'm bringing that up is that because we see that investing is actually the easy part.
Yes.
It's it's the journey with the company and the exit which actually makes or break the investment. So how is that something that is a merit, you think? For the
Yeah, I think that's definitely a merit, because I think there's a couple of things. Firstly, there's a rigor and a discipline that a network brings to the table. And I think in terms of just the investing process, that we are reviewing deals on a quarterly basis, there is a person who's normally from the domain or has an interest or some knowledge which is beyond, or is just a very savvy investor who ends up being a deal lead. And in that situation, that person is actually driving the process as well. One can choose to be a deal lead oneself, but there's somebody else who's driving the process and is doing a lot of the work that is important, which is the due diligence, which is the follow-up, which is making sure that they're apprising the investors of what's happening. That's very valuable. And I think also in terms of the fact that most of these companies will need a lot of strategic input at some stage, or will need some ideas and will need input. So the fact that there's a intelligent money there and somebody who can guide them, etc., is also very valuable. So I think the whole process, the whole input, the whole sort of ecosystem working towards turning this into a successful investment is very valuable.
So, we see that there are members who are passive members and who don't really get enough out of the network, and then there are some who actually maximize being a part of. So, what would be a couple of points that you think would make it worth your while to be a part of the network?
So what I'd say is that when one starts off, attend all the meetings, attend all the learning sessions, attend everything, even if most of us are very experienced in other fields. So it's pretty much like you're beginning the journey as a beginner, and you're actually asking questions or thinking about something that, I'm sounding like a complete novice in this area, but that's worked we've all done that in the past. So I think going and attending a lot of these events, even if it's Angel Investing 101, is something that one should probably go in and do. And I also think that, getting engaged in a lot of things, because we all bring a lot of experience just by the fact that we've been investing for a number of years. And we've come from industry, or we've come from, working as entrepreneurs or various areas. So we will not to be scared of going in and getting engaged and helping with due diligence, or helping as a deal lead, or doing something, because the more engaged you get, the more one will get out of it.
Yep.
And that's very important. And if one is not doing that, you obviously won't get the full benefit of the network.
Completely agree. We've seen investors who are very active in the listed space, but when they come here and if they don't get involved, they completely freeze, because it's a completely new asset class, and and the mechanics don't map at all.
Don't play out. I mean, they play out entirely differently from the listed equity space, and it takes some time. And I think one has to step back and say that it will take me some time.
Yes.
So one shouldn't really rush into an investment in 3 months, or in the first few months, or because in the beginning, when one sees a lot of deals, they all look incredibly attractive as a new angel investor, and that's where a number of people make the mistake of just jumping into anything.
So leading from that question, what do you think is your advice to new angel investors on how they should build a portfolio of companies?
So my advice would be that in the first case, definitely build a portfolio, because I think what happens is a lot of people tend to just get so carried away by the first few ideas that seem fabulous that they end up investing a lot of money front loaded. And we all know from angel investing that you can hear the one-off success stories, but one really does need to build a portfolio of 15 odd companies or 10-15 odd companies in order to generate the returns. It's unlikely that quite a few are going to fail, and then you're going to get the multi-baggers as well. And I see a lot of Indian angel investors not following that rigor and process in this thing. So I think that's and that one can do very effectively through a network, because if you're an individual investor, you have to put up a reasonable size of money for anybody to even engage in a discussion, whereas through an angel network, we're all pooling our resources, so you can go in with small sums and then build towards a portfolio. So that would be my first advice. second bit on how to build a portfolio, I've actually seen people do it successfully in very many different ways. So I've seen some people who have great domain expertise in healthcare or consumer or technology, and they've just focused on the areas that they understand and invested in a number of companies in that space itself only, and that has ended up giving them great returns in terms of what this thing. So I think one can do it either that way, or one can follow through, look at some of the successful investors and follow a little bit of what they're doing and see how one can. But I would say always invest in something where you understand the space, or devote the time. You can understand it as a consumer, you can understand it from what you believe the market is or anything, but I think it's very important not to just do something blindly or in that sense. So there are many ways of building a portfolio.
So just to end that, what we are seeing from the network perspective is that actually the ideal number of investments that for that portfolio effect to play out is somewhere between 15 to 20 companies.
Right. I mean, and that's what it is in this thing, and it should be 15 to 20 companies. And a lot of people don't get there.
Like you said, you just stop. If you stop at 5, and that's one. And the second is continuing to invest at proper intervals and not front load the whole investment. The other thing that we've seen works is that if you actually follow, like you said, if there is an investor that you think is a domain expert and he or she is willing to lead the deal or syndicate the deal, you actually walk with them. And
actually, I'm glad you brought that up, because if I see somebody who's a great investor willing to be the deal lead or willing to invest a large sum of money, I definitely will look at that deal much more closely in terms of, and will definitely be looking at it and thinking, what are they seeing? And conversely, if I see somebody who really knows the space and is not willing to invest in it, then I will also question my own judgment in that space.
Super. Thank you so much, Gita.
You're very welcome.